Hi everyone, it's Jack back with another video, and today I'm going to be talking about Stellantis stock. Not a household name to many, it was formed from the 2021 merger of Fiat Chrysler and Peugeot Group. It's the world's fifth largest automaker by sales, behind only Toyota, Volkswagen, Hyundai and General Motors. Unlike some of these, it has a truly worldwide presence and has a major market share in pretty much every geography outside of China. It's a 55 billion market cap company, currently trades with a P ratio of around 3 or 4 and 8% dividend yield. Even though it's been up 22% in the past year, up significantly year to date, this is still a tremendously undervalued company with a lot of potential. The key risk being how this company manages, like many automakers, the move towards batteries, the move towards electric vehicles. And it'll be interesting to see how this plays out for sure, but this is a business that is being severely discounted for its ability to do this. Fiat, Chrysler and Peugeot, obviously huge names in the automotive industry, three very large brands, but that is not all that is in this portfolio. Tremendous names across many different geographies, diversified across many different price points. We have absolute luxury in the likes of Maserati, premium brands in the likes of Alfa Romeo, Jeep to some extent, Chrysler, and then many other brands that cover a wide range of geographies. Vauxhall, Opel, Peugeot, Dodge of course, Citroen. Really a ton of names here that cover an incredibly diverse range of geographies and price point, which is incredibly important for a brand like this. When I saw the PE for this business of around 3, I was expecting to see a report for a business very clearly in distress. The most recent report given in February for the full year of 2022 could not be further from the truth. Record 13% margin, global battery electric vehicle sales up 41% year over year. Number one in Europe essentially, commercial vehicle sales by battery electric vehicles. Number 2 overall in battery electric vehicle sales in Europe. Industrial free cash flows, so free cash flows from manufacturing essentially, up 78% year over year, showing early signs of their progress towards the 2030 target of 20 billion euros, times by 1.1 if you want US dollars, 10.8 billion euros of industrial free cash flow, $7.1 billion of net cash synergies, essentially from the merger. And they're really making strong moves towards their target in 2030 of major battery electric vehicle nameplates in the market. Unrivaled commercial vehicle market leader in Europe and South America with 30% market share and 29.5% market share respectively. Across their tons of brands, they have many markets where they have over 10% market share in a very, very fragmented market landscape for automotives. The pure financials, again in euros, were all absolutely excellent in my opinion. Net revenues up to almost 180 billion euros, up 27.5 billion or 18% year over year. 31% increase in operating income to just over 20 billion euros. Profit before taxes 19.2 billion euros, that's up 32%. Net profit 16.779 billion euros, up 26% year over year. These are all absolutely fantastic metrics in a tough year, a very tough year for car manufacturers, and Stellantis absolutely excelled. With combined shipments actually being down 2% year over year, as I would probably have expected with 2022 being a tough year for automotive manufacturers. The primary reason for this increase in net revenue despite shipments going down is of course price rises. They have an incredibly strong market share in many regions and they were able to show their pricing power by increasing prices in many geographies. So despite consolidated shipments being down 2%, net revenue is still up 18% and their operating income margin went up from 11.9% to 13%. Stellantis is buying back shares and paying healthy dividends, and it looks like this is due to continue. Across all geographies, they're expecting 3 to 5% growth. China is one of its smallest markets, it has just around 0.6% market share there. I'm not too concerned that it's only going up 2% there. It's a very competitive market. Late pull forward in demand due to the end of temporary tax reduction on autos. In most of their key geographies, they're up 5%. In South America, where they're already the clear market leader, only 3%. Strong growth in Brazil expected. Most important thing, industrial free cash flow is going to be positive, and adjusted operating income margin is going to be double digits again by their guidance. If this was trading at a P ratio of 20 plus, then yeah, I would be expecting better than 2 to 5% growth in other geographies. However, this is trading at a P ratio right now of 3 or 4. That is, in my opinion, pricing in the absolute worst case scenario, pricing in negative growth, significant failures in the company. That's just absolutely not the case. This is a company that has excelled this year and is looking to move forward, continuing. It isn't all sunshine and rainbows, of course. Like-for-like sales in some countries were down. In North America, the market share slipped from 11.1% to 10.7%, and in enlarged Europe, which is to include the UK and Iceland, slipped from 19.3% to 18.3%. In the Middle East and Africa, they actually increased to 12% from 11.8%, and in South America, they further consolidated their position as the market leader from 22.9% to 23.2%. This is by no means perfect. They have a clear weakness in China, and it is unlikely, in my opinion, that they are going to grab massive shares of the market in India and Asia Pacific anytime soon, really. However, in their key geographies, they are roughly maintaining market share, slipping slightly in what I mentioned was a very tough year for automotive companies. The key risk for this company is, of course, electrification. Can it successfully electrify cars? And this is by no means a simple task. This is a high degree of difficulty, but like many other companies in this space, I'm looking at Ford in particular, which has essentially pulled two of its best-selling cars out of the UK and is looking what looks like an exit from Europe, in my opinion. The Fiesta and the Focus are both pulled from the UK. That is not the case for Stellantis. Battery electric vehicle sales leadership in Europe, number 1 for commercial vehicles, number 2 overall. They're number 1 in the US for plug-in hybrids, which of course plug-in hybrids are not going to be the future in 50 years. But right now, they will make good sales off them as the pivot towards battery electric vehicles continues. They're building 5 gigafactories. They've secured 50% of their 2023 target. They want 400 gigawatts in 2030. They're expecting 250 in Europe and 150 in the US and Canada. They're partnering with the likes of LG and Samsung. They have raw material partnerships with a number of key suppliers. All of this is looking to me like the battery electric vehicle portfolio. It's actually achievable, and I think by 2030 these are one of the automotive companies that I actually believe they can hit their targets, and I believe they will be able to hit that 20 billion euro cash flow metric in 2030 and have a successful business, by which case this is an extremely undervalued company. Essentially, since the merger in 2021, this company has traded at what I would consider bargain basement price to earnings multiples, price to cash flow multiples, even price to book. See, price to earnings 21 just 4.64, 2022 2.75, and right now it's currently trading at around a 3. Price to cash flow equally low, just 2.56 times current cash flow. Price to book value of just 0.7. These are far below the S&P 500 averages and far below industry peers. The automotive industry, outside of Tesla really, and the luxury car manufacturers like Ferrari and Porsche, do not typically trade for massive multiples, partially because of the difficulty and the risks around electrification, partly because of less than stellar balance sheets. However, that is not the case with Stellantis. It has a decent balance sheet and it is performing admirably and it is working towards its target on electrification. At the very least, it's on progress in my opinion. I think this discount is extremely harsh, and if it continues executing, I can see serious multiple expansion on the horizon. Don't get me wrong, the transition to battery electric vehicles is not completely straightforward. However, I think this business is executing fairly well. I think in the automotive industry, brands are often underestimated. Those high quality nameplates, brand equity is definitely there. This company has a really strong portfolio of brands, market leadership in many geographies, absolute market leadership in South America with over 20% of the general market there. I think it's a $55 billion company right now. If it achieves those $20 billion of free cash flow target, or 20 billion euros, in 2030, which I think is reasonable with a moderate degree of difficulty in my opinion, with some multiple expansion, this could easily be a 4 to 5x stock in the next, by 2030. 10 times free cash flow multiple will put this at a $200 billion company. I think it has a chance of overachieving its targets potentially. It has a really strong market share, which I can't see it losing. Of course, it will lose some market share perhaps, but Tesla isn't going to eat the world here. Not every car is going to be a Tesla, and I think many automakers, for example Ford, I think are particularly struggling with this, in my opinion. I think there's going to be some consolidation in the industry, and Stellantis is in a prime position to grab up some market share. So I'm very bullish on this company. I've just started to put my portfolio. I think at the current valuation there is such extreme margin of safety, and I'm quite happy to pick up an 8% dividend yield right now. So this is not only an absolutely excellent dividend stock with reasonable payout ratios, it's buying back shares at a decent rate. It bought back over 2% of its shares in the last year. It has an extreme margin of safety, it's low valuation, but it also has the chance to potentially 4 or 5x with reasonable margin of safety. This is a no-brainer for me, but of course, it's just my opinion. You should let me know yours in the comments down below. I'm not a financial advisor. You should do your own research and due diligence. Don't just buy things because I'm buying them. However, I love this business and I'm going to continue loading up on it, and I hope the price actually decreases a bit. That being said, like and subscribe and enjoy the video. Subscribe if you want to see more. See you again next time.